Ira Epstein of Linn Associates with your agriculture update for this Wednesday, the 20th of August, 2019, and we're about 4:11 p.m. I wish I was a.m. I'd be getting up for the morning recording. 4:11 p.m. Central Daylight Time. We had a bit of a rally in grains, and I use the word a bit. No big changes. The interesting news to me of the day was the USDA had, with the Pro Farmer Tour, some of its staff for meetings and halls and so on as this was going on in different states. And one of their staff got threatened. And I'm talking the USDA staff, so properly so. The USDA pulled all their staff from continuing with the tour. That doesn't mean the Pro Farmer Tour won't go on, but you can see the hostility that's going through here because the farmers, and I read stories about it, they're upset because they think the USDA still has the numbers wrong depending on where you go to look at the yields and the acres. So it goes on, and they're probably more aggravated, and rightly so. They've lost their market share. They're the ones taking the beating in the market. And while the government offers some support, they've lost market. They're not getting that back. And that is the important event. Make a deal with China, some of that comes back, certainly not all. Think about it. You have new supply chains. You're not going to worry about us, the whale, dictating how you do business, even if they make a deal with the U.S. That is what's going on. So you're looking at cotton up a little bit. You're looking at a mixed picture in the energies today. Bonds and notes, they were actually lower than this, so U.S. interest rates climbed a little, as did the stock market today. But as you can see where the market's having trouble on the weekly area chart, you keep getting up to this 18-week average of closes and the market stalls there. For the week, you're down 6 3/4 cents, finishing at 860.5. That 18-week average is 865, so you're literally right in that zone. The downtrend line I'm going to leave in place. I just extended it further, and each time that it doesn't get to it, that number drops a little bit. So the downtrend line comes in around the 880 level. In terms of the trend, it's down as measured by the swing line. Now, what a swing line is, it's a line that I developed that looks at the previous day and decides from the action of the day, is it a higher high day and low day, an inside day, an outside day up, or an outside day down. 5 variables, and off that it decides where to draw that line. I don't draw it. I built it into the system. So what you have is a pattern here, and you hear this so often on financial TV, of lower highs, lower lows, which is bearish. That's broken if the market gets through 880 3/4, and I'll come back to this line. Look at how the two are starting to tie together. That's just something to pay attention to. As you take a look at moving averages, the 18-day moving average of closes in red is the closest to the market action. It's offering resistance temporarily at 877.5, but that number is also moving about a penny and a half a day. So it's going to be closer tonight when the market reopens at 7 p.m., probably around the 876 level. So it'll be a very interesting time given that we closed at 873. In terms of Bollinger Bands, these black dashed lines here and here, they're an algorithm designed to keep the market trading within them 95% of the time. So the first challenges of them are often support areas and the upper side resistance. They're out of play, as I call it right now, unless you get a big move. To get down to the lower band, you have to drop 18 cents. There's no new news out at this point, so that would be a rather large drop. And to get to the upper band, you have to get over the resistance of the 100-day average. That won't be easy, I would think. The 18-day is the one that's in play. As we take a look at slow stochastics, a momentum index, it's drifting. Oftentimes, momentum leads price, in fact, most of the time. But there are times, just like now, when you just start drifting, and prices are somewhat doing that. So I'm going to call the trend down, the bias down since prices under the 18-day average of closes, and momentum sort of flat, but it hasn't turned up, so the market's still in a bearish stage. In the soy meal, you made today a high that took out this previous high of 301. Now, what that does, in essence, you have double bottom here of 296.60. Now you've got the higher high right in, and notice where the market went to, 301.50. The 18-day average of close, 301.80. So you're knocking on the door of the resistance. Can this turn the trend up? The answer is no. You've already negated the downtrend with this action. To get an uptrend going, you have to do two things. You have to close over the 18-day average of closes. Number two, I'd like to see a pattern then develop of higher highs, higher lows. More important to me is that the downtrend on this chart has signaled it's over and momentum is turning up at the same time. In the soy oil, the battleground's right here. The 18-day average in red, the green, the 100-day. Momentum is flattened out. You had been in a downtrend with lower highs, lower lows, but it sort of stopped, just cold in its feet. It market closed 29.12 over the 18-day average, so you have the bias up. Momentum's gone flat. You've hit downside targets, and the market ran out of gas. In the corn market, you're still very much in the bear play. You have the lower highs, the lower lows, you have the embedded reading. So until the red line here closes over 20, my theory is that the market will be sold on good rallies by the pros, and they'll still be looking for the potential. Doesn't mean it has to get there, of wherever that lower Bollinger Band comes in, which is now under the 360 level. In the wheat market, you embedded the slow stochastic today, I believe. It was the third day in a row where you had both numbers, as you can see, under 20 the day before and under 20. Now, the day before this, it wasn't. So today you embedded. Where did you embed is the problem. For me, the problem is you embedded right into the lower Bollinger Band. So do I think the pros are going to be aggressive in selling this market right here? The answer is no. Even though this rules the day, I think they'll wait and see how the market does on a rally before they do anything. They have no reason to go long yet because of momentum. That's my theory. If the 18-day average closes over the 20, that changes the momentum, means you've lost that bearishness, and it could be the price eventually wants to get back to the 18-day average. Is that a bull sign? It is not. Still a bear sign. It could be a contra-trend rally. In the sugar market, you still are, number one, in a downtrend, lower highs, lower lows. You're under the 18-day average, so the bias is down. You are oversold. Potential target, if the market wants to keep going, is 11.19. So far, this market's shown no sign that it's ready to do anything other than continue to break. I admit it is oversold. In fact, I'm pointing it out. Coffee threw out another one of these signals where momentum is lost on the downside. It lost its embedded reading. Do you see how you closed at 24.32? Day before, both numbers under 20, under 20, under 20. I'll keep going back with you, under 20. Right here, you lost it, but the day before you had it. So you lost it, you got it back. That's when you can get it back. And you did have another break. Take a look what you broke into. The lower Bollinger Band, and now the market's lost it. So even though the market's been full of tricks here, it has stayed under the 18-day average. It has hit another secondary target, in fact, the third target, as you can see here, and the market is signaling it's time to be out of shorts. That does not mean it's time to be long. There's a big difference, but that's what that warning sign is. If the market plays its trick game again, it'll re-embed tomorrow, but without that, the odds favor that you've just run out of your downside momentum. In the cocoa market, you still have the embedded reading, and with it, you've had the pattern of lower highs, lower lows. One of the things I look at as a chartist is when you get a break of this size all the way down, sometimes it's best to just leave the market be if you haven't caught the trade already. And the reason is that's a heck of a break. What are you looking for? Another one of these breaks from 26 roughly down to 21. So you had a break of 20% in price and you think you're going to get another 20. I'm not saying it can't happen. I'm saying there's a time where you pick your chips up and you walk just like this to another table. You sit down and you play at that table, right? Sometimes you get a cold hand pushing too hard. In the cotton market, we have a pattern here of a lower low and a higher high. We don't have a trend that is at work. We had a contra-seasonal trend and a contra trend because of where the market's at in relation to the 18-day average with downside bias. And now the market seems to be running back to that 18-day average to fight a new battle. Even if you close over that, the fact that you have a lower low and a higher high won't do much for me in getting friendly one way or the other. But momentum in this market is trying to push up, and it's been a warning sign. In the cattle market, remember on Friday you have the cattle on feed report. This market, it looks as though if it's up and steady when it opens in the morning or higher, it might lose the embedded reading. I wouldn't be surprised if, and I said this starting Monday, if we start now, we're at the point with after this big break that a bunch of people are just taking money off the table. It's also getting into the Labor Day holiday, so you're getting thinner trading already in some of these thinner markets. In the feeder cattle, sideways action, momentum up, bias down. I'll call the trend down now. But if you take out 135.97.5, you negate it, and I don't know that there's an edge playing into the cattle on feed report. In the hog market, the trend is still bearish, but we have been going nowhere for 2 weeks. I mean literally nowhere. You are oversold. You're in a downtrend. That doesn't mean you can't go lower and finish another run down here like you did in coffee, but you don't have the embedded reading, and this market's just sort of fishing around. I don't see anything friendly on the chart. I'm just questioning again. You've come down so much in a thin end of the summer trade. Is it worth pursuing? And I talk about this and other things in my research. Now, if you've been watching me and you haven't tried my research, let me explain how it works. Twice a day, I'm writing reports. The word is written. They're emailed to you. And in those reports, I am going to review the day's fundamentals. I'm going to give you an idea of my take on what's going on in the market. And then I back it up in the morning with a subscriber video. Now, the purpose of the video is I start recording at approximately, well, I'm up and reading by 4:30 or 5. I've read everything I want by 5:30. I'm typically recording by 6 a.m. My goal is to have this in your hands well before 7 a.m. If I oversleep, I'm sorry, but I rarely do. And what goes on is the video is going to look this way. It's going to include a lot more studies than you see behind me in this particular video than you're watching. This is what a written report will look like. Now, I'm going to prepare you for the next day's USDA reports, for the economic reports coming out, even reports out of Europe, and giving you in the morning a taste of what's all going on. Daily numbers refers to one thing, window envelopes, a study I don't show here, audio commentary. A lot of people want to hear my short takes on the market at night and in the morning. So I record about a 2.5-minute recording that is called to you automatically on your phone if you're in the United States. If you're outside of it in Canada, Mexico, it doesn't make that call. You have to be in the lower 48 for that to work. If you'd like a free trial to all this, it's run $60 a month. There's no charge if you have a free trial, and I have a record of everybody that's had one. So to get set up for it, you can either call my staff, they'll set you up. You can go to our website, and on our website, go to the free offer section, look at the different offers there, and you can work with those. It's very simple, and again, it is free. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.